Bitcoin versus gold, initial conditions, divergence, and the new monetary system. This chart offers a different way to look at Bitcoin and gold. The question is not whether Bitcoin will repeat gold's path, but what happens when a new monetary system is born inside an existing one, but starts from completely different initial conditions. 1. Initial conditions. Gold entered its modern monetary phase after the 1971 regime change. Bitcoin was born in 2009, inside an already mature financial system. Gold developed alongside money, banks, governments, and financial markets. Bitcoin entered that same environment as a new technological and monetary system. In a dynamic system, the response to an event depends not only on the event, but also on the state of the system when it occurs. 2. Different systems, different responses. This is why comparing price alone can be misleading. Gold was already mature. Bitcoin was just beginning. A younger system has less liquidity, history, institutional structure, and constraints, and therefore greater sensitivity to change. That does not make Bitcoin stronger than gold. It makes it more responsive. 3. Bitcoin was born inside gold's monetary environment. Bitcoin did not emerge in a vacuum. Gold already had a defined role. Store of value, reserve asset, monetary hedge. Bitcoin entered the same monetary space, but with a different architecture. So the relationship may be better understood as established monetary system versus emerging monetary system. Gold represents deep monetary memory. Bitcoin is still creating its own. 4. The divergence. This is where the chart becomes important. Both assets operate within the same broader monetary environment, but they developed at different speeds. That can produce divergence. The divergence does not necessarily mean the relationship has failed. It may mean the new system is still evolving. Within the structure presented here, Pattern May 8th provide the mechanism for that divergence to complete itself. The divergence may therefore be a stage of the structure, not the final destination. 5. The 0.5 level. The Fibonacci 0.5 level is not simply a price target. It represents the midpoint of the structure. Below 0.5, the system remains in the lower half of the range. Above 0.5, the upper half begins to dominate. Bitcoin has now moved above the midpoint of the structure defined from its 2009 initial conditions. That shifts the analysis from accumulation toward expansion. 6. The new relationship with gold. Bitcoin does not necessarily need to become another version of gold. The deeper possibility is that both assets move towards similar monetary functions through completely different paths. Gold already has an established role within the monetary system. Bitcoin is still discovering its own. And as Bitcoin gains liquidity, institutions, users, history, and constraints, its behavior should gradually change as the system itself matures. 7. Phase, not just price. The key variable is therefore not simply Bitcoin's price. It is Bitcoin's phase of monetary development. Since 2009, it has evolved from experiment, speculative asset, global asset, emerging financial system. That process may still be incomplete. Conclusion. The chart does not suggest Bitcoin will do exactly what gold did. It suggests something more structural. Bitcoin was born inside the monetary system that gold helped shape, but from completely different initial conditions. Because of that, Bitcoin can follow a very different path while still responding to the same monetary forces. The current divergence may therefore represent a structural phase rather than a breakdown. And if the proposed structure is correct, Pattern May 8th be the mechanism through which that divergence completes itself. The real question is not, will Bitcoin replicate gold? It is, what monetary attractor is Bitcoin converging toward as a new system inside the old one? We may not simply be watching the price of an asset. We may be watching the maturation of a monetary system.